recently conducted its annual workplace survey for 2011. What was the scope of that survey?
We had over 1,600 people respond across Asia Pacific and just under 500 from Australia. It really asked people what they think is happening in their local economies, what's happening to their staff, and therefore what their sort of hiring outlook is going to look like during 2011.
What were the key indications from that survey?
So for Australia, there were two key trends that were very interesting. Firstly, of the respondents, 40% said that they intended to increase headcount during the first half of 2011. Now that's an increase of headcount, that's not hiring, which can be associated with the movement of staff as per normal sort of course of day-to-day duties. That was dramatically up on last year. Coupled with that, 27% of the respondents said that they were looking to increase the volume of contract labour that they were using in specialised accounting and finance positions as well. So very encouraging results.
2 years on from the GFC, what do the results of the survey tell us about the health or otherwise of the accounting and finance industry in Australia?
There was one key statistic which was fed back, which I think was most important, and that was of the respondents, 57% of them said that they were worried about losing their staff in the first half of this year. Now that's radically different to what we've seen over the last couple of years. That's a consequence, I guess, of increased employee confidence in the marketplace. People are more inclined to listen to job opportunities, but the fact that more than half of line managers out there are worried about losing staff, and predominantly their best staff, is something for people to keep their eyes on.
Some years ago there was an acute shortage of skilled people in the finance and accounting sectors in Australia. Are you still seeing that trend?
It's there, it's not as acute. If you were to look back at the boom years, say 07, 08, and give that a scale of 100%, what you're probably seeing today is somewhere in the realms of about 70%. That being said, demand is dependent upon which sort of area you're working in and salary levels. So, across Australia in every state, you're seeing increased demand now, anything from entry level 40, 45,000 through to about 120 in commerce, 130-140,000 in financial services. Positions beyond that in terms of salary level, so when you get into slightly above mid-management level, financial controller sort of positions and above, we are still seeing that supply of candidate outstrips supply of job order.
What's your forecast for the overall health of the employment market for finance and accounting in 2011?
Well, it's extremely healthy if you're a candidate looking for work. It's probably less positive, arguably, if you're an employer. And I guess what I mean by that is some employers may find themselves losing some better quality labour this year. And we're beginning to see already the volume of counter offers increasing quite dramatically, the number of multiple offers taking place. So candidates are definitely in the ascendancy in this relationship. So on that basis, a very strong labour market, but somewhat biased towards the candidate versus the client, or the employee versus the employer in 2011.
Are there any regional differences across Australia in the employment outlook?
If you look at the more sort of diverse economies being New South Wales and Victoria, as I said sort of earlier, demand is very much in that sort of 40 through to 120, 130,000. Indeed, in those states, you're seeing demand within, I guess, constructions and development-related industries. Certainly, when you look to how those industry sectors were over 12 months ago, financial services is still strong in both states, but with a bias probably towards the domestic financial services firms as opposed to the international firms. Utilities always remains robust, particularly in Victoria. But if you compare that to, I guess, Western Australia and Queensland, Western Australia, of course, dominated by natural resources, as is the case in Queensland. But Queensland's economy a little bit more diverse. So you are seeing, I guess, FMCG being more of a factor up there. And perhaps a sort of a sector on the downside, really, in Queensland, which is a huge employer there, would be the sort of the public sector, where we're seeing still some layoffs of jobs in that particular area. What we are seeing across all states is an increase in demand for temporary labour, and for a variety of different reasons. But in the main, companies are finding it harder to hire permanent staff as quickly as they did during the downturn. Less available labour. I guess the candidate's been a little bit more choosy about the opportunities they may be looking for. So what that's meaning is that they're using contract staff while they look for those permanent members. And that's resulting in, I guess, wage push inflation in that area. And I'm talking about sort of salaries, hourly rates that equate to about 40,000 to 60,000 per annum. There is a definite case now that demand outstrips supply, and that is pushing up hourly rates and annualised salaries. I guess what we don't know yet, but what we're anticipating to see, is that that will push its way through sort of the hierarchy of job orders through 2011.
David Jones, thank you very much for joining me.
Thank you, Stuart.